Hey investors, my name is Gustavo and this is the channel Building Financial Freedom. So what I'm bringing here today is a little, it's JP Morgan Chase has two different, predictions to S&P 500 2024. It has one for the JP Morgan Chase, for the people, for the masses, and another one completely different for the S&P 500 2024. They're bringing to their private bank clients, the 1%. They're really wealthy people. So, it's kind of weird to have the two strategies here. I'm going to show you the JP Morgan Chase for the mass, for me, where I have my account. And I have the JP private bank for the really rich people. So let's see how this works out. It's so weird. So, okay, let's start this one here first, right?
To kick off the week, let's talk about market technicals. Joining us is JP Morgan's head of technical strategy, Jason Hunter. And you look around, and I wouldn't say you're particularly in love with what's happening right now.
That's right, yeah.
Are you, Jason? And it has to do with what I couldn't understand is you do think maybe we'll orchestrate a soft landing, but in doing so...
See, the guy already looks like, a bear. He already not liking what's going on, which in November and December, S&P is going high.
We'll start perceiving the recession risk as much higher than we do right now, and that will hurt stock prices?
Yeah, that's correct. Yes. Yeah, because when you look at the timing since curve inversion and go back into the 1960s.
Yeah, we'll keep talking some, but let's go through this here, which is from now. He was talking about history and stuff, but let's talk about now.
View the house view that Mike Feroli and the U.S. economics team have as we get into the back half of the year. Even with the soft landing outcome, the inflation expectations and that softness in the data that takes you there allows the Fed to start easing at an every meeting pace as we move into the back half of the year. And that's, again, with a soft landing outcome, not even a hard landing outcome.
And you don't check with Jamie Dimon on that, do you?
Yeah, we talk within the research organization.
You talk within the research organization, because I'm not sure he would agree with that entirely.
See, the journalist is asking if you check with Jamie Dimon. Jamie Dimon, right? The president of JP Morgan, one of the most powerful guys in the world. So, and he said, yes, he kind of in the same boat with that guy,
so
Jason Hunt.
There were a lot of really esoteric things in your note, too, about DM bonds. Is that developing market?
The developed market bonds, so the U.S., Europe, yes.
And those are expected to benefit even more than stocks, in your view?
Yeah, so stocks should pull back.
See, he thinks stocks will pull back, and a lot of the bond market will get, the money after, the rates start, going down.
In my base case here on the technical side, I think the S&P is going to drop to 3,500, which is just a retest of the low.
Oh, wait a second. Hold on a second. Well, I guess we buried the lead. You think? Just
listen.
Say that again, slowly.
So a retest of the lows for 3,500.
We're at 4,500.
Yes, 20% down from current levels.
It's actually more than... So this guy, JP Morgan Chase Bank, the regular JP Morgan for everybody, is telling their prediction for S&P 500 next year is 3,500. We were at 4,600 when he said that. So we're talking maybe 24% decline for the next year. All right, let's stop from here and now let's listen to this.
Here's the market question. Elise, are you more bullish now than you were yesterday morning after what you heard from Powell?
Elise.
Sure. We were having a lot of conversations about this on our floor yesterday.
Here we go. Elise Ausenbaum, JP Morgan Private Bank Global Investment Strategist. So we have Jason Hunter. He's the head strategist. He's in JP for 19 years. And then we have Elise, she's for the private bank side. And let's listen to her.
I think what we learned from the Fed is that we have to start entertaining our bull case a little bit more. But we came into yesterday's decision
entertaining the bull case
on the front foot, and we've been, encouraging investors to add back to risk exposure. We have a relatively bullish view on the S&P.
Encourage you to invest in risk assets.
S&P 500 for the year ahead, and I think this just kind of underwrites our conviction in that call.
What's the bull case?
Bull case is S&P 500 ends next year above 5,000, but we'll see. I think.
There we go. One guy says 3,500 points. The other, she said over 5,000. So we're talking about 30 to 35% spread in between this word and this word. 35% spread.
I think that would probably dictate the Fed cutting before the second half of the year. But right now, our base case pencils in cuts in the second half of the year, not yet the first.
So the banner's awesome.
She has some interesting things. Look at this.
Boss says Fortress Diamond calls 5,000 SPX. Okay.
Year end. No, not quite. But I would say, isn't there a risk we could be there in January based on what we're seeing play out at the moment?
This is important what she's about saying.
That was exactly
I
what I was
think
thinking.
January feels a little aggressive. We still have to see, the earnings come through. We are making this call that the earnings recession is likely over and that we're going to see rolling earnings recoveries. But let's get through the fourth quarter reporting season and then look beyond to 2024 results.
That sounds like equal weight.
See, earnings recession was a key. So after the fourth quarter 2023 earnings coming and not showing, the companies are really having an earning recession. They're not losing a lot of earning. The earnings are running good. They're still profitable and growing. That will be a key point.
Weight and not market cap weighted S&P, is that right?
We do have conviction in making sure that you have exposure to the other 493 names in the index beyond the Magnificent Seven.
So yeah, that's another thing to S&P 500. The Magnificent Seven, those 7 top stocks, they're like 37% of the index. So, but she's saying we also should have exposure to the other 497, right? No, 493 or whatever minus 7. So that's important. I do have, a lot of exposure to the other companies, but I love those 7s. And on the top 7, on my point of view right now, the best are Meta and Google. That's why I'm buying. This is not financial advice. That's what I am doing. But for me, in my opinion, Meta and Google are very underpriced right now.
But we're constructive on the Magnificent Seven. I mean, these companies are projected to grow earnings north of 20% in 2024, and that is definitely an exposure that we're encouraging investors to
What's your
hold.
conviction when everybody gets out of cash? What's going to happen? We've never been here. $6 trillion in cash. We get under 5% money market fund. What?
That's so funny. There's $6 trillion in the money market right now, right? It's a risk-free 5% and liquid. You can cash in tomorrow. So you have $6 trillion sitting on the side, which, like he said, never happened. So what's going to happen if all this money starts flowing, right?
Well, I think you have to take into consideration that bonds are back on the table, right? That, to me, means that there is still a trade to step into some duration and not necessarily just plow into the equity market. I think some folks will remain a little reticent given where valuations are today.
That's true, because a lot of people run from bonds to money market, which I said, money market's liquid next day. So bonds are 1 year, 6 months, 2 years, 5 years. So, but when money markets start paying less, when they start cutting rates, that $6 trillion is not going to flow straight to stock market. The bond will start growing too. A lot of people will go back to bonds, which is a really safe, especially for older investors. They love a little exposure to bonds.
But given the improved free cash flow generation of S&P 500 companies relative to 10 years ago, we are comfortable with today's valuations. We just don't think that that's going to be what drives the upside into the next 12 months.
Elise, it's good to see you in person. Thanks for coming in.
That was important. Everybody's saying, the stock market's overvalued at the moment. And compared to, like she said, for the 10 years ago and for the cash flow the companies generated right now, we are right at the price. So we're expecting to, we can go bigger, which that's good. Let me show this really quick here. My channel, guys, 51 subscribers. So help me out, guys. Subscribe to the channel if you like it. I'm here to show anybody can do it. I have all kinds of videos here about Bitcoin, about how we can make money in Uber, another Bitcoin, Coinbase. Be careful, they have $20,000 of mine locked right there. This video was big, like over 1,000 people watch it. So help me out to grow the channel. So if you guys are here to the end, consider subscribe, share, make a comment, clicking here to subscribe and clicking here to watch these 2 REITs that I'm buying right now. I'm really excited about it. The 2 REITs I'm buying, and subscribe to my channel. All right, but thanks so much, and I'll see you guys next time, man. Bye bye.